Good morning and happy Monday, boys and girls. Nikolai here with Tape Reading Concepts, doing a quick walk through a Monday morning setup here that I closed just now. All right, so starting back here, connecting to the context from Friday, we did have here a close pretty much on the lows of the session in the upper 70s, and you can see here that with the Sunday night open, no surprises, no gaps. We did sell off pretty steeply here through the 70s all the way down into the low 60s here, and as Europe comes around the clock here to trade, no changes in sentiment, more selling here, orderly selling at this point, stair-stepping action to the downside. You can see that there's just about $500 here between the bases that price is building up on the way down. Classic range extension environment on the way down. I do usually come to the table around 7 o'clock right here and walk myself through the price action overnight through the Far Eastern session and the European session. This being especially the first day of the first trading session of the week. Notice that on the way down, none of the highs established on the way down really get taken out. They're momentarily tests of levels that seem to be building up. You can see here this poke above the last consolidation here, since building up this low here around 1860. Round numbers, psychologically relevant, very often attracting either profit taking or some type of bottom picking behavior. Stair stepping to the downside again, you can see about a $500 step to the downside, and then another one down here. Now what caught my eye here as I was breaking the market down is that this is what we call orderly selling. In this case, a stair stepping template to the downside. I do usually look for slope lines as reference points for how quickly we're descending, and I'm judging the symmetry and the distance that price builds up as pivots around these lines to gauge how sentiment is evolving and what the speed is. I do also pay attention to events such as this one, these momentary vertical price action, which suggests that sentiment here locally is becoming one-sided, meaning that everybody who wants to sell has likely already sold. And then I'm keeping these on account. This is the first time in this session, well, I guess there was one quite some time ago, which is likely disconnected here contextually from the current one here in the beginning of the US pre-open around 7 o'clock. So not really connecting this pivot to this one, to this vertical biological, though here we did have some one-sided action, quick horizontal, and then the orderly pullback here of about $500-600. In this case here, vertical, then price goes into horizontal, tries to move up, does find the sellers here on that regular $500 step, then another layer of selling here, breaking again new lows here all the way below 1850 on the extension. Second vertical right here, and what made an impression to me is that this frequency that price has built up here from the last few pivots, we fell a little bit short of it, which is a sign of potential weakness for the sellers. In this case, marking this as a 3D higher low. And then another reference point that I had here between the low at around 5 o'clock and the low that was here just around midnight in the Far Eastern session. Around this line, price was really building 3D equal lows, meaning that the pivots more or less fall squarely on the line. Therefore, with the slope in the third dimension, they are considered to be of equal value, which means that price is descending still at the same speed relative to this reference point over time. However, along the steeper one, we're already showing a little bit of deficit here. And then, of course, still no highs have been taken out. So on the way up, you can see the sellers showing up like clockwork, about $500 below the previous step. And then we get another layer to the downside. Now, we got another vertical in short order here, very close to each other. You can see the distance between these pivots is not nearly as much as the distance between these two vertical events. It seems that sentiment, is kind of getting ahead of itself, or sellers are really stepping on the bid and pushing it to lower prices in short order, but the selling is also fizzling in intensity very quickly. In this case, I got an even larger deficit here to the reference point, and even though I'm still falling along this line, you can see here the overshoot is roughly the same distance. I am at this point picking up weakness that is intensifying over time relative to one of my reference points. I do always like to participate very early after certain material observations are made, and in this case, since this is the third vertical coming in short order after the previous one without that material difference, notice that the difference here on the way down is just about $250 low to low, while if you compare to the previous one, the step here is literally 1, 2, 3, 4, 5, more than 6 boxes, so $600 lower on the extension, low to low last time. This time only about 250, and also in time this is happening much sooner. You can see here between about 820 and about 845, 46. So it's almost like a compression of that selling, which betrays both the urge, the intensity of the selling, which means that people are probably piling into an already mature progression at prices that are far from compelling, and at the same time they're falling short of an expected reference point. I like to trade close to such events. This was the third one, and I bought here the vicinity of that pivot once I saw that the profit taking started stepping into place. Had a very good entry, initially a good reaction to the upside, but sellers showed up, in this case about $250, $300 lower than the previous pivot. Now, these V-shaped reactions definitely don't look or feel well when you are into a bullish position. You don't want to see these V's coming into your trade, but I'm already committed to the idea. And the moment of truth is really in this vicinity here, where the now established level of support around 46 that already attracted these buyers, and then the secondary reaction makes another impulse that also takes us higher here. Now, my hypothesis for targeting was that within this stair-stepping sequence, we're likely to break at least one of the levels that are already established and probably travel to the next one. This is a relatively conservative expectation. My risk here in the opportunity is the staple one, which is about $300 per contract, so 3 of these boxes down. Comex Gold trading at $10 per tick. Therefore, one of these boxes is $100 here, being 10 ticks between 48 and 49, for example. So my stop was well down here, and targeting here, shooting for an excursion through this base to the next one up here, which was just below 1859. So bit of consolidation here in the middle of the last range here established between the mid 40s and the low 50s, and then promptly here vertical extension, suggesting that yes, the sellers are no longer in control. You see that the attempt for a lower base here fails, and a cascade of stops takes price all the way up into the previous resistance. Now, there was quite a bit of intensity here in the climb, so I did assume that with that much pressure, some of the positions established here in this vicinity are probably going to get taken out, or that the stops will get run, or like I like to think of it, the sellers will pitch the positions and give them here to this aggressive covering. Therefore, I bumped my stop. Instead of having it right in front of this level, I bumped it a little bit higher in order to see that event of stops getting run above an established horizontal. And indeed, price didn't hesitate here much in the upper 50s and went straight to my target, pocketing here 140 ticks in this position, with the time in the position being, well, just under an hour here. So pretty good. Maybe even got a little bit lucky, got hit with the profit stick. That's part of the game. Leaning here all the way into the previous base, or getting close to it. Now, in this particular case, price went all the way through the second layer back, all the way into this here base that was built up. It's pretty much the first horizontal build up within the session here, before Europe comes to the table here in the Far Eastern session in the upper 60s, and even this level, it seems now, yeah, this level is going to get probably a run for its money. You can see that despite the fact that price is already very stretched, buyers are stepping here at consistently higher lows. It'll be interesting to see how this one plays out here in the mid-morning session. It's just after 10 o'clock Eastern time right now. Hopefully this quick walkthrough gives you a few useful nuggets, and most importantly gives you insight into the tools and logical sequence that I use in order to find, place, and manage opportunities intraday here with Comex Gold. Let me know if you have any questions. tapereadingconcepts@gmail.com. I'll catch you guys in the next one.